I'm very happy to be here in Washington, D.C. to talk about decarbonization and what it means to industries. And I'd like to bring up our distinguished panel. So first, I'd like to introduce John Rogers, the head of sustainability for North America and at Anheuser-Busch. Sarah Bogdan, director and head of sustainability and ESG for JetBlue Airlines. Elizabeth Lewis, managing director and deputy head of ESG at Blackstone. And John Manell, U.S. leader for sustainability, climate, and equity technology alliances. So welcome, everyone.
Thank you.
Thank you.
Thank you.
So what an interesting time that we live in today. As you know, it's unprecedented. And so we only have 40 minutes, and we'd love for this to be interactive. If you have questions as we're going along, please raise them, because we don't want it to be just us talking, but we really want to make sure that you are getting what you came for as well. And with these esteemed colleagues across many different industries, I think we'll have interesting perspectives. My own personal background is having worked in the hospitality industry, in the car manufacturing industry, and currently, most people don't know what Kyndryl is, but we broke off from IBM. And IBM, literally, we are what I call the biggest startup in the world, 90,000 people and $19 billion in sales. And I'm helping to grow their sustainability program. But enough about me, let's go to our panel. So, John, let's ask you, what is the role and responsibility of CPG companies like Anheuser-Busch in decarbonization?
Great. All right. Thank you, Faith. Can everyone hear me? Okay? Great. So thanks a lot. I really appreciate being here, and it's an honor to be in the conversation here with my peers. First of all, Anheuser-Busch, we're the U.S.'s leading brewer. Been around 170 years, brewing some of the most beloved beer brands in the U.S. And I think central to everything that we do is how do we really connect to our consumers and solve important problems and serve the needs of our consumers. And I think that's such a central role that CPGs, like us, play in the sustainable agenda, and specifically on decarbonization. Is how do we really bring the meaningful connection, to our consumers, and ultimately, we're 19,000 employees strong. We have over 100 operations, in the U.S., 27 states. We have tremendous scale. We're a very natural company in terms of the products and the ingredients that we make. So how do we bring our innovation, behind that scale, behind that footprint, to really drive, meaningful, measurable impact that creates business value for us, but ultimately then connects back in a very authentic, meaningful way, again, to what consumers expect of us, what they're asking, more and more from us and from others, to bring into their everyday life, to the occasions where our products and other products are really serving a meaningful purpose. And so that's the opportunity that we have, and decarbonization being very central to our sustainability agenda, ensuring that we're doing that, again, in a high-impact, authentic, meaningful way that connects back to the consumer. Thank you.
Sarah, so I'd like to ask you about airlines. And most people don't think about airlines being decarbonizing and being, we actually think of them as being high emitting, right? The travel industry. I understand that because I came out of the hospitality, the hotel business. So how is JetBlue and the aviation industry addressing this? And, how are you meeting your net zero targets? And please explain what net zero is, because I think everybody has a different definition for that.
Of course. Thank you, Faith. Thank you, everyone in this room, for choosing our track to listen to. And thank you, of course, to the conference organizers for inviting all of us to speak. So again, I'm Sarah Bogdan. I lead the sustainability and ESG program for JetBlue, probably everybody's favorite airline. But you may also not be aware that in addition to flying planes, we also operate two subsidiaries. One, JetBlue Tech Ventures, our venture capital arm in San Francisco. We do a lot of work with in sustainability specifically, and then JetBlue Travel Products, sort of like an Expedia, where we offer hotels and vacations and other add-ons. So thank you for the candor of your question. I really do appreciate it because it's actually the way I typically like to start talking about aviation sustainability. For years, JetBlue has taken the approach of let's admit that we emit. We are aware that we are a high-emitting sector, and we are aware that today we have a significant impact on the environment. So JetBlue is just 5% of the US market, even though we do fly internationally. If you didn't know, we also fly to London as of last year. It's a very great product. Just 5%, but every day, we wake up, we take our almost 300 planes, we put in almost 3 million gallons of petroleum jet fuel into them, and then we fly about 1,000 flights per day. So very real impact. But if we can acknowledge that there is this impact, I hope that we can also agree that if we take a step back, air travel also provides a critical service to society. Many of us flew here today into millions of aviation adjacent jobs and bringing communities and cultures together. And I'm sure if you didn't think that, then throughout 2020, when all of our own personal plans were canceled or postponed, it was extremely painful for all of us. So I like to start with that lens, and aviation is such an important service to society. I believe that it should grow. I believe that it should be affordable. But we desperately have to solve this emissions problem that we have because the future of our industry depends on it. And it's not just me who thinks that. I get it. I'm biased. I do this every day. But if you were to ask my CEO, what's the biggest risk facing aviation? It is failure to respond to climate change. And I think maybe as a proof point, in this morning's session, I heard 2 comments about business travel in the discussion around net zero, one from PepsiCo, one from Netflix, and a discussion around, I think, a tax on business travel, and the other was around engaging with airlines and purchasing sustainable aviation fuel. So say all this because truly there is so much at stake for the future of our business, so no pressure. So what are we doing? Yes, we have committed to achieve net zero carbon emissions by 2040. I like to add that we made this commitment in 2020, so we actually did a whole lot of planning and thinking when all of our planes were parked. So 2040, the broader aviation industry has also made its own net zero commitment, and that's for 2050. And we're excited by any net zero commitment, even though ours is a little bit more aggressive. Our definition of net zero is really a commitment to do everything we can to drive down in-sector emissions through things like purchasing of sustainable aviation fuel, buying new fuel-efficient aircraft, and optimizing our operations to not waste a single droplet of expensive and climate-warming jet fuel. And then whatever is unavoidable, that's where we transition to the high-quality carbon offsets and hopefully as much removals as possible. And I feel like I've been talking a while, so I'll just say one other thing. We also agree that 2040 it feels like it's rapidly approaching, but it's obviously, we have to have interim targets. And so for us, we have set targets of 10% of our jet fuel to be from sustainable aviation fuel by 2030 and a commitment to reduce our per-seat emissions by 25% by 2030. So that's really a fuel efficiency target. So point is, a lot of work to do. Our industry absolutely gets it. And from my vantage point, the leaders across many airlines, we get it, and we're working on it as fast as we can.
That's great. No, thank you. And I like that the foundation is doing the conservation energy efficiency first, and then looking at purchasing renewable energy. Because we don't, in my mind, you're walking the talk, and a lot of times people would call that greenwashing if you did not. So thank you for that. Elizabeth, so I'd love to, at Blackstone, you get to see across all of these industries in terms of investment. And so what are some of the exciting business opportunities in decarbonization? And then what do you think in terms of the unique challenges? So what are the opportunities and challenges that you see with businesses?
Thank you. Thank you so much, Faith. Great to be here with you all today. I'm excited by all the enthusiasm and really expertise that we have in this room. So Blackstone, we are the largest alternative investment manager in the world. We are the largest owner of commercial real estate in the world. And sustainability and decarbonization in particular has really become core to the way we think about all of our investments, and I'll explain that in a minute. But I think at the core of this, right, we know that getting to net zero by 2050 will require $3.5 trillion every year of investment. from now until 2050. We know that the governments don't have this capital, right? They have many needs. It's going to come from the private sector. And so I think at the core of what we're seeing at Blackstone is the ability to invest at scale into decarbonization and to make it a really good, they're really good businesses. So we're going to provide good returns for our investors by doing this. So there are a few, I think, important opportunities that we see. So investing into the energy transition at scale. We've invested $16 billion since 2019 into investments that we believe are consistent with the energy transition. So these are renewable energy, battery storage, energy efficiency, and we've projected that we will have another $100 billion of investment opportunity over the next decade. Excitingly, I think, this is really becoming a mega theme across all different asset classes at Blackstone. So our credit business has a large sustainable resources platform that's devoted now entirely to the energy transition. Our infrastructure business has made energy transition a mega theme as well, and certainly in our private equity business. And I think one really important feature that we have, an opportunity that we have, and investors like us, is that we can think long term, right? So decarbonization at its essence is planning now and making capital investments now that reduce emissions into the future. And you have to have patient capital and a patient management team to be able to do that. And so we as private equity investors who have majority control over many of our assets can actually think long term. In some of our vehicles, they're actually perpetual capital vehicles, right? So we can actually think decades ahead, and I think that's a really important and unique opportunity that alternative investment managers have. I think the other exciting opportunity for us is to build capabilities in-house in Blackstone that help all of our companies reduce their emissions, right? So because of our scale, we've been able to invest significant expertise and resources across the firm. So we now have over 30 people across Blackstone full-time focused on ESG. So this is separate and apart from the investment professionals who are seeing energy transition, right, as major investment opportunities. These are people who have deep expertise in carbon accounting, deep expertise in helping companies, to your point, do energy efficiency and then go the next steps to get on their climate-aligned journey. So this is something we're doing. We've committed to reduce emissions by 15% in aggregate across all companies in which we control energy usage in the first 3 years of ownership. So this is getting our companies on this climate-aligned journey, and we're very excited about that. And then just as one example, that has become an investment theme as well. So we've invested in the leading carbon life cycle accounting company, Sphera, and that's the company that we're now using to help benchmark and do the carbon baseline accounting across our portfolio. So you can see we see this as a very exciting opportunity. Oh, the challenges. I'll just say very quickly, obviously there are certain sectors that are very hard to decarbonize, and I think that's where some of the most exciting work is going. I mean, we continue to be committed to transitioning the midstream sector in particular, and to taking the unique capabilities, for example, that the midstream oil and gas sector companies have on carbon capture sequestration. They have pipeline infrastructure that we will need to carry green hydrogen eventually, to carry carbon dioxide in order to sequester it underground. So I think those are some of that's the sector that is challenging to think about decarbonizing, but I think there are also tremendous opportunities and capabilities in there, and that's, I think what would be an interesting discussion to talk about today.
Thank you. A lot going on. And then John, at Deloitte, what is a systems of systems approach, and why is it critical for addressing climate change? So what is systems?
Yeah, so I'll give a brief explanation. I'm here subbing for a colleague of mine, Scott Corwin, who did all of the research on systems of systems and is out with COVID today, so couldn't make it. But I'll explain a little bit about what we mean by it, what the research says, and then also how I see this concept showing up with my clients. When we talk about systems of systems, we mean the need to think differently than the company unit, so to think broader than your company, and even to think broader than your industry, and to think in terms of the system that you're in. And we think of 4 or 5 of them an energy system, a mobility system, a food system, how all of the interactions that are needed to bring those products to market, and all of the companies that have to interact, how that carbon is transmitted through that system, how money is transmitted through that system, and it's really impossible to think about how to change that if you're just thinking about your company. And there are really a couple of reasons why we think that perspective is important. The first is that we just don't have a lot of time, right? And for any of you who've read the IPCC reports or read Speed and Scale, which is a great book, the takeaway that I have from that is to have any chance of getting to a 1.5 degree or even a 2 degree scenario, everything needs to happen now, right? Everything needs to start happening now. And so we can't think about a sequential approach where I change what I can affect in my P&L, we change the energy system, and then we change the transportation system, and then we change the food system. We just don't have time to do that. So this thinking about systems and the linkages between systems is a critical part of just moving fast enough to make the transition. And then the other reason it's really important is that there's kind of an orchestration problem, right? And some of you have talked about this, but if you think about a lot of the things that we need to solve, if you think about electric vehicles, for example, consumers are really interested in EVs. We're starting to see a lot more EVs on the road. The number one reason that consumers say that they're not going to buy an EV is that they don't believe that there's charging infrastructure available. The automotive companies don't think they can solve the charging infrastructure problem, and therefore we're in a situation where we have slow incremental improvement in the number of EVs. And the systems of systems approach is a way to help companies break through some of those silos and to think about how to make big changes. And I will say, when I talked about those systems, there are a couple key enablers or accelerants. That's the government, the technology industry, and the finance industry that have the ability to really change the incentives and help us accelerate if they're focused on the systems as well. And some of your comments, I think, spoke to that. For me, why it's important with my clients is when we think about sustainability strategy, it's almost always insufficient to just think about your four walls, your company, your P&L. At the very minimum, you have to be thinking about your customers, your suppliers, your investors, your regulators, the government, and how you use all of those forces to have a bigger effect. And so that's kind of what we mean by that phrase, systems of systems.
No, thank you. Are there any questions? I want to just kind of open it up quickly to any questions.
So we've got one here on how can we reduce the level of effort to facilitate this process?
How can we reduce the level of effort that it takes to
facilitate a net zero process?
Facilitate net zero process. Mm-hmm. Well, I think number one is what everyone is saying here, leverage technology. In terms of being able to quantify data, whether it's AI, whether it's leveraging these technologies that will enable us to accelerate the change. And I think, you heard here about battery storage, EV, further development of technologies related to the acceleration of renewable energy, whether it's microchips that actually increase the transformation of solar panels or winds into energy. So how we accelerate and use technology will actually help facilitate that process. Anybody else want to add to that? Go ahead.
Yeah, if I could jump in just on the point of orchestration, which I think is really, really beautiful. I think there's a really important role that we play, as leaders, in this space in our different dimensions and what we provide for accelerating learning and understanding. For example, 6 years ago, we embarked on virtual PPAs, and that was a really new model and mechanism for us. And it took us many years, cross-functional teams, a lot of engagement with our ecosystem, financial system to really understand the mechanics of that. And now, as of last year, we're 100% renewable electricity on the back of two large-scale VPPAs. It took a lot of time. But now that's if you're not doing a PPA, what are you doing today? So it's a technology, it's a mechanism, it's a model that's ubiquitous, that's understood, that's been proven. And so as orchestrators, how are we accelerating that learning? So what took some of us multiple years, I think to the point it needs to happen all of a sudden. Yeah. And so CPGs like Anheuser-Busch, with our ecosystem, how do we make sure that we're really accelerating that learning, being much more open, much more transparent in how we partner with, our suppliers, how we connect with our wholesalers, to ensure that we're bringing our learnings, we're getting their learnings, and moving much faster on the back of what's already been done, and how do we scale that?
There's another question.
And we have a question for JetBlue, which is, could you speak a bit about your landmark ESG-linked loan, and was there any incentive, and what was it linked to?
So thank you. So in 2020, we executed the first sustainability-linked loan for the airline industry. And thank you to whomever said landmark. I really appreciate that. So how did we do this? We worked with BNP Paribas, so our bank, and we had an existing $550 million revolver, and they were just really proactive in coming to us saying, what do we do that's new? And so we found this opportunity to put an ESG linkage into it. And I'll speak to the mechanics of it. So together we selected an ESG rating agency and VE, Vigeo Eiris, which is now purchased by Moody's. And so every single year, and I know this because I just completed the very comprehensive questionnaire process last week, we go through and we answer a growing list of questions to ensure that we are progressing and our ESG score is improving, and it directly correlates to the interest that we pay on this loan. And so we are interested in replicating this. Candidly, the airline industry took out a lot of debt during the pandemic, so we're shifting away from that and working on paying that down. But I think really impressive and makes a lot of sense to me. I think a company that is well managing ESG risks and opportunities is likely deserving of a lower interest rate and probably in a better position.
Yeah, no.
A better investment.
Yeah.
Yeah.
I would just, it's amazing. It sounds like a wonderful program. And I think this is an interesting thing for us to think about too when it comes to the role that capital plays on credit. When you're thinking about credit investments into decarbonization, sustainability-linked loans, I think are becoming a very important tool. It's sort of a big focus of our credit platform that invests in the energy transition, and you can directly tie the capital to decarbonization targets, right? So I think a lot of people think more about equity investing sometimes, but there's a huge opportunity in terms of credit and decarbonization.
No, that's excellent. This is interesting. I'd like to ask the panel here. There's trade-offs that you're always going through. There's quarterly earnings, and then we're trying to hit these decarbonization goals. How do you manage that? How do you manage that with your board, with your senior leaders, as we continue down this path?
I'll start off and just say, I think fundamentally our decarbonization efforts come from a place of knowing that we're making our company stronger and more resilient. And so we're creating value in them over the long term. As I said before, we're fortunate because we can think long term. We don't have to sort of be reporting on our, this is the benefit of a long-term investment capital and a patient partner like we are to our companies. I also think what we're seeing is that more and more companies are coming to us seeking not just capital, but help on their climate journeys, right? They're coming to us because they understand that this is core to their future growth and to their future as a company, whether they're going to go public, where this is now becoming, right, the SEC has a rule proposing that greenhouse gas emissions be disclosed by public companies, so it's certainly on the mind of any pre-public company, but really I think it's on the mind more broadly of any company. So to me it's not so much a trade-off. Of course, there are capital investments that are going to be significant and costly, but I think at the core we see the broad tide going, right, that this is core to your business and a good investment opportunity. Yeah.
And if I can build off of Elizabeth's comments, at our very ethos, our purpose is to create a future with more cheers. So what guides us is this future, and sustainability is very core to everything that we do. So I think that's so important. But then when we look at value creation as these very tangible, real links to with our renewable electricity, we brought that into Budweiser, and it was on every can, every bottle of Budweiser. We just launched Bud Light Next as our first climate neutral certified product. And again, finding ways to really connect with the consumer that we know builds brand equity, that we know serves our consumers in interesting and differentiating ways that can create top line momentum, and then all of the efficiencies of investing internally, that contribute to the value proposition of decarbonization within our own operations, within our logistics. But I think to something that Elizabeth mentioned earlier was this patient capital. So also making sure that we have our own ROIC hurdles, and it's important that we bring in other investors in these partnerships, in these collaborations. These VPPAs are 15-year agreements. We have energy as a service as a mechanism now, where we have other capital coming in that can have a different horizon, a different return expectation, to complement our own directed capital that we're investing internally. So I think it's having that purpose, but then focusing as well, where we're strong, and then bringing in partners to complement.
John, did you want to say?
The only thing I would add, and I agree with some of the comments about the long-term focus, there are trade-offs in the short term. In the long term, I don't think there are that many trade-offs, and I really challenge the clients I work with to not think about decarbonization as a cost and risk issue, but to think about it as an innovation and growth issue. And if you think about it, if we're in a decade when the entire economy, every organization is going to have to decarbonize, and we're on this massive transformation, the multi-billion-dollar businesses of a decade from now are going to be built now in decarbonization. And so I think we need to challenge ourselves to think about it in that light.
And I think that that's an excellent point in terms of where we're at, right? Because we're living the transformation, right? And, let's go back and think about the companies that don't exist. Sears, remember Sears Roebuck? We could go through the list. I don't know if you remember some of these books. What was it, Good to Last?
Yeah.
If you look at those 10 companies, 8 of them no longer exist?
Right.
Today, what are the top companies? Service technology companies. They did not exist. And they grew during a revolutionary time where computers transformed the industry. We are literally going through that now with decarbonization, right? So we are seeing these new companies that we do not know today that will exist tomorrow. And there's companies today, let's be real, that will not be here tomorrow, right? So it's literally understanding that, and how do we take advantage of that and also meet the goal that we have to meet. So really, it's really interesting, because when you're living it, you can't see it.
Right.
But, that's the good news.
Can I also just
Sure.
throw in for the aviation perspective as well? Because believe me, when we talk about financial trade-offs, I very much get this. The aviation industry has gone through a couple financial challenges in the last couple of years. I don't think we at JetBlue yet unfortunately have not made profit since before the pandemic, but the next quarter is our quarter, we can feel it. But we continue to make a lot of progress in sustainability for all of the reasons that I spoke of before. And it's easy to say, it's a strategic move, it makes sense. But what's been useful for us is just decoupling my pursuit of SAF approvals, SAF, Sustainable Aviation Fuel. I think in that context, maybe I'll put it in that context. So we talk a lot in aviation about Sustainable Aviation Fuel, or SAF, because we see this as the most promising means for us to grow its use of renewable fuel and reduce our emissions and achieve our net zero targets, but it costs more money. And the way I have gotten 4 deals approved in the last couple of years is by having separate task forces and avenues with my senior leaders, because if I bring it straight to the investment committee that reviews every purchase that we make, it would not pass muster probably in the traditional ROI that we evaluated. So I think just having that buy-in from our senior leaders and then working on a different path has been successful for us.
And you've done it with customers too, right? Because we're a part of, as one of your largest customers, we're a part of one of the SAF deals.
So I would love to actually just highlight and celebrate this. So that the other piece of it is finding creative means of funding some things that cost money.
Yeah.
And there's this awesome new trend where corporate customers, including Deloitte, who is one of our early partners, have contributed to the purchase of sustainable aviation fuel for airlines. And it actually really, really is meaningful. If there's an amount that I can purchase that my CFO will allow me to go spend more on sustainable aviation fuel than conventional jet fuel, when a corporate customer literally helps us buy more SAF, that is more sustainable aviation fuel that is being flown on, it is helping helping this emerging market to eventually get to scale. And then in turn, the corporate customer deservedly gets the Scope 3 emissions reduction claims. So when they do their own net zero, their calculations, their greenhouse gas inventory, they can say, we flew this much, but we also purchased and helped buy this much SAF, so therefore, can adjust our emissions.
So it's funny that you say that, because I worked at Tesla, and EVs now have become the new industry standard. But when you talk about sustainable aviation fuel, I keep saying, why can't we have sustainable gasoline fuel? Versus trying to create all new EVs, can we take our existing vehicles and use a fuel? So, because to create new vehicles is using such a huge amount of carbon footprint. Would we not leverage technology like that to help us with our existing footprint and accelerate the transformation? Those are the kinds of things, when we're thinking about how do we accelerate change? How do we, make these things happen at a much quicker level? It's a huge opportunity. Any questions? Because I have an interesting one that kind of takes us into environmental equity and justice, right? So we're on this path, transforming, decarbonization. We live here in the United States, but what about those countries, right, that do not have the resources that we have here, and how are we helping? How are we helping? You were just in South Africa, so maybe you can talk about this with Anheuser-Busch. How are we helping those countries in terms of their decarbonization and transformation as well?
Okay. Yeah, excellent. Happy to take the prompt. So as shared, I was previously in Africa for the last 5 years before coming and joining the U.S. team here last fall. And I think it's a wonderful example, again, of a role of learning and a role of innovation at scale, where we really look to the U.S. on this innovation frontier around VPPAs, for example. And in Africa, that wasn't a model at all. It was very far and distant. But we weren't converting from traditional energy to renewable energy. We were creating energy, for the first time. And many of our operations or the communities in which we were operating within. So it was that fast learning and making sure that we're understanding, what that innovation is from both, the business model, the financing mechanism, as well as the technology itself, some of the partners that we had in the U.S., bringing them into Africa to really leapfrog. And that was really, the important opportunity that we had there, to do that in a very inclusive way. And we still have meaningful work to do in the U.S. on that equality as well. When we look, at our agricultural operations, we're highly connected, to the agricultural communities here, and there's so much work to be done, to ensure that we're really advancing and accelerating decarbonization within our agricultural landscape and production systems, and there's right here in our backyard that inequality, and again, what role do we play with convergence to make that impact?
Absolutely. Anyone else in terms of?
The only thing I would add is that the equity component of decarbonization is important. It's not only emerging markets. If you look at the choices that we make as companies in developed markets, including the U.S., they disproportionately affect disadvantaged communities. And a lot of us are, engineers by background or have some training. We tend to treat it as an engineering problem, that I can figure out how to, tune the machine and eliminate the carbon. And it's just not fair, and it's also not effective without thinking about the impacts on people. It just won't work. And so that's, I think we always need to challenge ourselves to bring that lens back in.
That's a fair point. And then what is the role of government here in terms of, is it the carrot, the stick? Is it something that we're not doing today? Thoughts on that in terms of government?
Sure, I'll start. I think the government has sort of two main roles to play. One is to help with innovation, right? So we don't have all the technologies at scale commercially that we will need to get to net zero by 2050, but we have amazing innovation, right, in this country and in other countries, and the government has a history of fostering innovation, fostering the future economies, to sort of the equity point too, creating economies really that provide jobs and livelihoods and create a competitive advantage for our country. And I think then, if the government, and I will just point out the DOE loan guarantee program, for example, is doing amazing work, making sure that any innovative opportunity that needs financing and is not able to get it in the private sector, will get a meeting, a phone call with the loan guarantee program, and they will provide the financing, ideally to get it to commercial scale. And we've had some tremendous successes out of this program, like Tesla. So I think it's a great example, I think, for us all to think about when we think about creating the technologies we will need. I think the second really important thing for governments to be doing, and they are doing increasingly, is to set clarifying rules about what is a sustainable investment or company and what is not. We're seeing this most strikingly in the EU with the Sustainable Finance Disclosure Regulation, which is, the goal behind it was to ward off greenwashing, but it's really become a fiscal policy. It's directing capital into more sustainable investments and away from less sustainable investments.
Absolutely. Sure, the question.
We've got actually quite a few questions here from the
Okay.
audience, so I'm going to try and pick one or two of the best ones, and sorry if your questions don't get answered. One here, a specific question for Blackstone. While the bond markets have established frameworks, what are the KPIs that private credit use to deliver promised impact without greenwashing?
So I'm not sure I got
I couldn't really understand that. I'm sorry.
Sorry.
Just me.
It might be the acoustics. While the bond market has established frameworks, what are the KPIs that private credit use to deliver promised impact without greenwashing?
Okay, that makes sense. Thank you. Yeah, so I think this refers to the point I made about sustainability-linked loans we were talking about in our credit platform. So we have a team of people that when we are evaluating an investment, evaluates what the KPIs will be for that particular company, right? The KPIs for an airline company are going to be very different than a software company or a midstream oil and gas company or something like that. So that will be tied to the sustainability-linked loan, and then we will, disclose that as part of the financing structure over the coming years. So I think that's, it's very actually clearly tied and disclosed in a transparent way.
Great, thank you. And I'm going to pick one more, if that's all right, Faith. Shash asks, with the plethora of ESG data providers, how do you standardize and incorporate such data into your footprint calculation and reporting Scope 3 emissions?
And I can,
Yeah.
I can start on
talk
that.
about
I think there is a lot of data out there. I think what we're seeing in greenhouse gas inventory calculation, especially in Scope 3, is there was an effort early on to just get everybody on the bus and have everybody start reporting. And a lot of that was done through proxy data. So we had proxy data that helped us estimate what our inventories were. And where we see that going now is to move from what I say bad proxy data, so very approximate proxy data, to much better proxy data, so more specific to regions, to types of emissions, to companies now moving to actual data that's coming from their operations and supply chains. And that's going to be the progression that we're going to see. And in Scope 3 is the hardest part of it, and it'll be really interesting. I think we'll see supplier marketplaces where suppliers can disclose data and then all of their customers can pick up that data. I think we'll see more auditing and assurance. I think we'll see use of blockchain and other technologies to do that. And that's going to be a big area of evolution in the coming years.
I would just add on that this is exactly why we've sort of built out this capability in-house, is so that we don't have to rely on
Right.
proxy data. So with our control companies, we'll actually do a measured footprint. So we have really good data. And then this company, Sphera, that's an investment of ours, can actually not just do carbon footprinting for a company, but by product line. So that I think is a whole other level of intelligence that's increasingly important.
I'll add one very quick thing on the topic of Scope 3 and not actually answer the question. Obviously, I know a whole lot about emissions associated with air travel, and in my experience, when I compare emissions averages with actual JetBlue flight data, the emissions often overestimate the actual flying. And a lot of it is because it's not really fair, right? If you look across all of the airlines or any industries, there are some leading actors and some aren't. There is no consideration of sustainable aviation fuel, how hard the airline is trying to fly fuel efficiently, or what aircraft they're even flying on. So my strong recommendation is to actually engage with the airlines. We are now working to provide actual flight data. We know exactly how much jet fuel we used on every single flight, and we know whether there was SAF on it or other pieces of data. And I mean, I know that the airlines have been slow to release this, but it's not just us. We see the value in actually providing this data and then hoping that you'll engage back with us to proactively work to reduce those emissions.
Yep. No, thank you. And just with Scope 3 is that getting actual data for Scope 3 will only improve it.
Right.
The other thing is, as you're saying, leveraging blockchain and artificial intelligence so that companies are not double counting, right? Because I'm your supply chain, you're my supply chain. How do we differentiate so that we're both not counting that? And so that's a lot of the work is starting to happen in that whole area, because this is the most difficult for the industry. But just to wrap it up, I am very proud to be up here with my colleagues, because you see private companies are trying to move forward. Despite all of the things that are continuing to happen, it's a very challenging time. Companies are saying this is important. Investors are saying this is important. And so as we move down this journey, I truly believe that we will see a huge transformation that's occurring. So systems approach, making sure that as we continue to develop processes and engaging across industries, I think is going to be absolutely critical. And it's not just industry, but with investors, with governments, with nonprofits, and our consumers. So thank you very much for coming, and enjoy the rest of the day.
Thank you.
Thank you.
Thank you.